The CNBC app. Global market news in one place. Customizable sections and personalized alerts. Stocks tracking, interactive charts and market insights all in your hands. Stay connected. Stay informed. Download the CNBC app today.
Good morning and welcome to Squawk Box Europe. I'm Juliana Tattlebaum with Carolyn Roth here in London. Karen is in Dubrovnik this morning at an IMF conference. These are your headlines. A U.S. appeals court pauses a ruling that threatened to derail President Trump's tariff agenda as the U.S. administration pledges to continue its efforts to upend the global trade order.
President Trump calls Fed Chair Jerome Powell to the White House, Powell pledging to make rate decisions based on the data as Trump repeats his criticism of the Fed's policy stance.
The president did say that he believes the Fed chair is making a mistake by not lowering interest rates, which is putting us at an economic disadvantage to China and other countries.
Global policymakers gather here in Croatia to discuss the economic outlook amid continued tariff uncertainty. I'll be joined by European Economy Commissioner Valdis Dombrovskis at 7:30 London time.
Well, very good morning to you. It didn't take long, Carolyn. 17 hours it took for a reversal, or a pause anyway, on the court order that blocked President Trump's reciprocal tariffs. A whirlwind, I think it's fair to say, for markets.
And that was to be expected in some way, shape, or form. But you could argue, and we'll get to that throughout the show, it's not about the trade war anymore. It's about global capital flows and how those could be affected, and Section 899 of the big, beautiful bill. We'll get to that.
We will, but I think first let's just flesh out what we heard from the appeals court stateside. A U.S. federal appeals court has paused a court ruling that much of President Donald Trump's sweeping tariff agenda was illegal. Now, this decision marks a legal victory for the Trump administration, but leaves the future of U.S. tariff policy in doubt. President Trump has called on the Supreme Court to reverse the original court ruling, and the White House says it will continue to pursue the appeal process.
Fed Chair Jerome Powell met President Trump in the White House on Thursday at Trump's invitation. A Fed readout of the meeting said the two had discussed economic developments, including the growth and inflation outlook. The central bank said Powell did not discuss his expectations for monetary policy, but stressed decisions would depend entirely on economic data and non-political analysis. White House Press Secretary Caroline Leavitt told reporters that the president had repeated his criticism of the Fed's policy decisions.
The president and I both saw the statement that the Fed put out after the meeting. That statement is correct. However, the president did say that he believes the Fed chair is making a mistake by not lowering interest rates, which is putting us at an economic disadvantage to China and other countries. And the president's been very vocal about that, both publicly and now I can reveal privately as well.
Now, the other big story that's making the rounds in financial circles this morning, Carolyn alluded to it a moment ago. Analysts are warning of a hit to U.S. investment from a provision of the Republican budget bill passed by the House last week. The bill allows the government, the provision in the bill allows the government to raise taxes on foreign investments in the U.S. if companies or investors are from countries the U.S. deems to have punitive tax policies. Morgan Stanley says the provision will pressure the dollar and disincentivize investment, while J.P. Morgan has flagged significant implications for companies globally. And Deutsche Bank analysts say it could allow the U.S. to transform a trade war into a capital war and hit demand for Treasury. So what are they talking about? It's Section 899. Carolyn, I think this was an enormous bill, the big beautiful bill, as President Trump likes to call it. This is a little publicized provision, but now in the last 24 hours, it's really come into the spotlight, with analysts across Wall Street flagging it as a major concern here. And why is it? Well, firstly, what is it? How does it work? We're talking about a provision that would add a 5% surcharge in its first year, another 5% after that, and then to a max of 20%. it opens the door effectively for penalizing holders of U.S. assets, foreign holders of U.S. assets. And it comes at an incredibly tricky time when foreign investors were already debating whether they should be putting money to work in the U.S. So that's just going to exacerbate the uncertainty and, I think no doubt drive more concern about whether you want to be investing in the U.S. right now.
You're spot on, Juliana. As investors, international investors are already repatriating their U.S. Treasury holdings, and that's what we saw. We're seeing the bond sell-off at the back end of the curve, and this is only going to be exacerbated given the fiscal concerns. So what could this raise? Of course, it's supposed to be a revenue raiser. That's number one. Number two, I'll get to in a second, but it is estimated to raise, according to American Compass, $2 trillion. That's a lot of money, yet is it really going to plug the deficit or the debt levels? Not so much, because obviously the big beautiful bill is going to add another $3 trillion to the overall debt level. Now, the other point is this really a geopolitical ploy to punish some of the adversaries, which are actually friends, of course? It would be the EU, it would be China, of course, though there was some debate as to whether China would be included, and a lot of question marks still. But this would really play into the MAGA narrative of punishing the EU and others for their unfair trade practices.
Well, that's why some lawyers are calling it a revenge tax, this provision, the Section 899 provision. When you think about how President Trump's advisors, his internal circle, is likely viewing this provision, you think about Treasury Secretary Scott Besson. What is his chief concern right now? I think it's pretty clear that his chief concern is the bond market. And we saw ultimately President Trump walk back those initial reciprocal tariffs because of the bond market volatility, because Scott Besson had warned that we could see a serious accident in the bond market. So if Scott Besson is looking at this provision, he's no doubt going to be very weary of anything that could scare global bond investors more. But on the other hand, to your point about what this means for trade negotiations, Howard Lutnick, he's got to love a provision like this.
Oh, absolutely. But I can't see how this is going to get through the Senate. I just can't see it. With the markets being so jittery and panicky about what happens on the fiscal side, plus what happens on the trade side, what happens to the demand for U.S. Treasuries, I just can't see this happening.
Well, let's take a look at how markets are reacting as investors look through this latest analysis that's circulating this morning from various parts of Wall Street. We are looking at right now how U.S. markets closed up yesterday. It was a decent session on Wall Street as investors reacted to the court ruling, which invalidated President Trump's reciprocal tariffs. And then, of course, later on is when we got that decision from the appeals court to put that court order on hold. So ultimately, we did close up in positive territory yesterday. But now here's the reaction to the appeals court decision. Looking at Asian markets overnight, we are seeing generally downbeat trade there. In particular in Hong Kong, the Hang Seng off about 1.5%. You're seeing about a 1% pullback in the Kospi in South Korea. And the Nikkei 225 also under some selling pressure this morning. So clearly global sentiment has taken a hit on the back of the fact that we are now looking at those reciprocal tariffs being reinstated here. Looking at European futures, here's where things stand at the moment. We are still about 50 minutes away from the European market open, and you can see here we're looking at green signals across the board. This comes after a European equity market slipped in yesterday's trade, an overall lower liquidity day yesterday. Benedict Delot joins us now, equity derivative strategist at BNP Paribas Markets 360. Good morning. Wonderful to see you again. Thank you for joining us. Yesterday, we saw a positive reaction from the market to this news that President Trump's reciprocal tariffs would be put on hold, that they were effectively illegal, and the markets cheered this announcement. But do you think that was premature? Because, we've already had 17 hours later a reversal temporarily of that court order, but also the Trump administration coming out saying, we're going to work around this. It's not a big deal. Our trade agenda is still intact.
Yeah, I would say overall that the saga around tariff will continue. This is not the end. The first reaction for market was positive because this was putting away some risk of the US entering a recession or stagflationary environment as a whole in the US. But the bottom line is that we're likely to get some news over the coming weeks. We're unlikely to really see the end ahead of discussion by the US authority. Now, the reality for market is that uncertainty has not faded. And this is why we see that the market today is trading higher, but with less conviction, as people are really still in these very uncertain markets.
What does that mean for volatility and the outlook for vol heading into the summer, which is a traditionally quieter period, especially in European markets?
Exactly. So usually there's a seasonality on vol where people don't want to pay too much fita over the summer. It's quite quiet. There's less market moves. But I think two reasons will make it a bit different this year. First of all, there was the August 2024 sell-off when markets were very liquid. And I think this is very fresh into investor mind. And then the second point is that we are in a year where it's very heavy news. It's a market that is driven by headline news. And this will probably continue over the summer. So people will have to hedge those poor liquid environments by having some hedge, by having a bit more volatility into their books.
So that means you can go away in May and come back around Labor Day if you wanted to, but of course you need to take out protection. What kind of protection do you take out? What does it look like?
Yeah, so if you look at the volatility term structure, it has re-steepened. We've had this massive vol collapse over the past 2 weeks or so. And we think it's unlikely to go down much further from there, especially when you look at the August or September expiry, which we think are kind of key for investors to look at hedging, because this is when we're going to get the real data that will feed through the economy. And this is where we could start to see some cracks into the data that will feed into price action into the markets.
What about the broader story, the underlying story, the trend? And the trend has been your friend, of course, in terms of buying into European equities. Take a look at the DAX and the FTSE MIB. As Sylvia highlighted before, it's up 6 to 7% so far this month. U.S. markets have also done pretty well. So how do we deal with this buy Europe, sell America? Hasn't necessarily worked in the month of May. Do we buy both and just add a little bit of protection in terms of volatility? What do we do?
Yeah, so short term, probably that the market will remain headline driven, but we think there is a trend, and we've seen that at the start of the year, of rotation away from US asset. People are globally overweight US asset. We've seen this trend of US exceptionalism over the past few years, and now we think there's an alternative into Europe. We're seeing the fiscal support for Germany that will start to kick in the second part of this year. We're seeing the ECB that is still on ease. We expect the ECB to cut by another 25 BP this month, next week actually. And so we think we have a bit more support in terms of the growth story for Europe, and we think it provides an alternative away from US assets.
Benedict, good morning from Dubrovnik. It's Karen jumping in. I want to bring up the point that we're just talking about overnight. This Section 899 in the big, beautiful bill, effectively that could penalise foreign investors on the tax side if they're in a jurisdiction with punitive taxes. This just seems like another negative if you're investing in the US markets. There's again another door in the way in terms of that investment. Do you think that fuels what the Europeans are hoping for, more European savings into European companies and investments?
Yeah, absolutely. I think it adds to the climate that is kind of getting harder for investor or foreign investor as a whole to invest in the US. And now that you've got alternative pocket of investment elsewhere that should provide you better return or good return as a whole, and you've got cheaper valuation, then that provides just alternative for investment as a whole.
Benedict, one of the messages that jumped out to me just in the past few hours of being here was that, look, the second round effect of tariffs is actually a big deal. That just because you don't do trade with the United States directly, and you may be depending on trade with European partners, that trade is also slowing down, and that investment is slowing down because core countries like Germany and France are also seeing some sort of negativity and caution. What do we think about in terms of the earnings impact of a second round effect from tariffs?
Yeah, so we've seen some earnings downgrades just after the Liberation Day. I think this was analysts adjusting their expectation after what was announced. The companies, in terms of their forward guidance, were not too negative, but it was the peak of uncertainty, so that kind of made sense. We will have to see what the end point will be on tariff, what the end point will be in terms of negotiation between the different countries. But the longer this period of uncertainty lasts, the more damage it will do to the real economy and to the corporate landscape.
So much optimism, Benedict, around fiscal stimulus coming out of Europe and, of course, primarily Germany. And one of the guests we had on the show yesterday was a little cautious about this, saying, hey, it's not going to come through overnight. Obviously, it's not. There's a lot of hurdles to pass, a lot of bureaucracy, a lot of red tape to be passed beforehand. So should investors have a good hard look at what is reasonable and what is realistic here in terms of how it's going to boost growth and corporate earnings?
No, definitely. It will take time. This is a package that will last for years, and the effect to the real economy will probably take some time to happen. But I think we're seeing a change in direction between the US and Europe. We've had 10 years of the US running a big deficit versus Germany that was more in a fiscal tightening type of path, and now we're seeing a reversal of that. So we're going from one equilibrium to another equilibrium that is more positive for European assets as a whole.
All right, Benedict, thank you so much for that. Really appreciate it. Benedict Lowe, equity derivative strategist at BNP Paribas Markets 360. Okay, still coming up on the show, the U.S. has urged Russian President Vladimir Putin to agree to its ceasefire proposal in Ukraine. More details next. Plus, President Trump is set to hold a press event with Elon Musk in the White House today as the billionaire steps down from government work. And defense officials are gathering in Singapore for the Shangri-La dialogue. We'll cross live to hear from Australia's Deputy Prime Minister and Defense Minister Richard Marles. And of course, Karen is still at the IMF's Joint Economic Conference with the Croatian National Bank in Dubrovnik, where she will be speaking to none other than Valdis Dombrovskis, the European Economy Commissioner. We'll be back in 2.
Welcome back to the program. Revised data shows U.S. GDP fell by 0.2% in the first quarter, narrowly better than the 0.3% initially calculated, supported by stronger business investment. However, the figures show weaker consumer spending than initially estimated, now growing at the slowest pace in almost 2 years, while net exports subtracted a record 5 percentage points from the GDP calculation. Meanwhile, initial weekly jobless claims ticked higher to 240,000 last week, slightly ahead of expectations, to the highest level in 5 weeks, while continuing claims data also exceeded expectations, rising to their highest level since November 2021. U.S. Treasury Secretary Scott Besson has said trade talks with China are, quote, a bit stalled, and that finalizing a deal would likely require the direct involvement of Presidents Trump and Xi. This after the U.S. and China announced a 90-day tariff pause on May 12th, with both countries continuing to negotiate in that period.
You were there in Geneva, and that was the surprise breakthrough agreement. No one expected that. To be honest, what comes out now from Besson that talks are stalling is not completely expected, because what came out of Geneva was too good to be true in the first place. These are massively complicated talks. And what I'm reading here is that Besson said that the U.S. has been focusing on other trade talks. We know there's active trade talks going on with Japan, of course, with the EU, all that back and forth. I know Switzerland, of course, they're talking to them as well, because of the complexity of the talks and the egos that are involved. No surprise, it's stalling a little bit. What's your perspective?
I mean, and I think it was always optimistic that we would get any kind of comprehensive trade deal anytime soon. I mean, these deals take years typically to iron out. I think the other, like the elephant in the room here, is how much does it matter what's happening at a at a bilateral level when you have the courts in the U.S. saying, hey, hang on a second, all of your reciprocal tariffs could potentially be null and void at this point.
That's a really good point. In fact, Besson, he did comment on that, and he said that none of the trading partners had changed their stance or their posture with regards to the trade negotiations on the back of that court ruling. Now, I don't know whether that's entirely true. I'm sure that all of a sudden these trading partners, I would assume the EU thought, hey, all of a sudden we've got some leverage. Trump has lost a little bit of leverage here. That was his main bargaining chip, the tariffs. So maybe, hey, we can ask a little bit more. Maybe the concession from the U.S. are going to be a little bit bigger than thought. A very uncertain environment here to negotiate in.
If you are a country negotiating with the U.S. right now and you know that President Trump is up against a wall, at least temporarily on the tariff front, why would you give anything away at this point? Why would you not just hold out? Because there's so much uncertainty as to what mechanism the Trump administration can use to impose these tariffs. The Wall Street Journal is reporting overnight that the Trump administration is considering considering a plan to impose tariffs using a never-before-used provision. You may have seen this of the Trade Act of 1974. So I think what's clear is the administration is furiously working right now to figure out what mechanism they can use. So the idea that this court ruling on Wednesday takes the tariffs off the table is misguided. That is the message from the Trump administration. They'll find a way somehow if they want to impose tariffs.
And the market is trying to work through that, and that's why we saw the rally fizzle out in yesterday's trading session. Obviously, we're still higher. We're still higher at the end of the closing at the end of close, but the market is looking through that to some extent. They know tariffs in some way, shape, or form. They're still going through. Maybe not the ones that were initially planned, maybe not the ones that were recently struck down. That said, the market knows there is a lot of pressure ahead still. And if you ignore the trade stuff, there's still, of course, now the new section about potentially capital limitations, and then there's always the debt concerns. There's a lot to contend with.
And the connection between what's happening on the tariff front and the debt concerns. The fact that if we are looking at tariffs coming off the table, that's an incremental negative for revenue coming in and a negative for the debt outlook and the deficit outlook stateside.
All right, let's change tack. The U.S. has urged Russian President Vladimir Putin to agree to its ceasefire proposal for the war in Ukraine, telling the UN Security Council the deal is Moscow's, quote, best possible outcome. Acting Deputy U.S. Ambassador John Kelly also warned that Washington would consider stepping back from its role as a mediator should Russia make the, quote, wrong decision. The U.S. says Israel has agreed to a proposal for a temporary ceasefire in Gaza, however, did not provide detail on the contents of the agreement. The White House is awaiting a formal response from Hamas, which said it is reviewing the terms of the deal. According to a plan seen by Reuters, Washington has reportedly proposed a 60-day ceasefire between Israel and Hamas, which would see the release of a number of Israeli hostages in return for Palestinian prisoners, as well as the flow of humanitarian aid into Gaza. Now, the Shangri-La Dialogue, Asia's primary defense forum, is still underway in Singapore with attendees including global leaders such as French President Emmanuel Macron, of course. However, there are also some notable absences. Lynn joins us now from the forum with a special guest. Lynn.
Good morning to you, Carolyn. I think the absence that you might be referring to there is in relation to China, with Beijing yesterday confirming that their defense chief, Admiral Dong Jun, will not be attending this summit in a break with recent tradition. There is no official reason given as to why, and China is being represented by a lower level academic delegation. This is coming at a time when military-to-military communication between the two largest economies has worsened. And yesterday, US officials, when asked about this, said that the Trump administration is still trying to find a way to engage with China on that front. This, of course, means that there will be no opportunity for any kind of direct talks between Pete Hegseth, the US defense chief, and his US counterpart. Now, I am joined by a very special guest here, the Defence Minister of Australia, Richard Marles, who is also the Deputy Prime Minister of the country. Minister, great to have you here. Thank you for joining CNBC.
Great to be back.
I wanted to ask you just about some of the meetings that you're having here, including your US and Japanese counterparts. Can you give us a sense of what will be discussed or has already been discussed?
Well, I think all of us are very much focused on how we can be working together to provide for the collective security of the Indo-Pacific, to make sure that there is balance in the region, that there is stability in the region, and ultimately that the region is underpinned by the values that we all share of democracy and the rule of law. And I've met with my counterpart, Secretary Hegseth, this morning. Certainly that was a really positive meeting, building on our first meeting in Washington in February this year. And we feel very optimistic about the focus that America is bringing to the Indo-Pacific, about the opportunity to work with America to provide for that stability and security of this region.
Let's talk about that relationship with the United States, more specifically in relation to AUKUS Pillar 1, which is a nuclear sub-partnership. Is that on track?
It is on track, and we spoke about that today, as we did back in February. We're working very closely together to see that all of these milestones are reached, that we see the establishment of the Submarine Rotational Force West, which is at HMAS Stirling south of Perth, which will see US Virginia class submarines rotate through there, operate from there in the next couple of years. What has underpinned that, or will underpin that, is an increased number of visits from US submarines to Perth, and that is occurring. We're also seeing a lot of Australians who, both in a sustainment and maintenance sense, are working in Pearl Harbor to gain skills. Our submariners are on Virginia-class submarines gaining skills. So it is all happening, and there are certainly challenges. We're not sanguine about them, but fundamentally progress is being made.
As a trend for some time now, we have seen defence spending rise. My understanding is that Pentagon officials have urged Australia to lift spending to as much as 3% of GDP. Is that realistic given all of the competing, options, the priorities domestically?
Well, I mean, you put the question in the right way. Public money is hard fought, and it should be hard fought, and there are a lot of competing demands on public money. But that said, we have engaged in the biggest increase in defence spending in the history of peacetime Australia. That has significantly lifted our defence spending and our defence capability. We want to engage in the conversation with the United States and with the region about how we can meet this strategic moment and calibrate our defence spending to that. So this is a conversation we're up for, that we're very willing to have with America. We understand where America is coming from in the way in which they seek to have this conversation. But we have already seen significant increases in defence spending in Australia.
French President Emmanuel Macron is here. He will give the keynote speech. It was just a few years ago where there was, of course, that anger with Australia backing out of that submarine contract with France. In your mind, has that relationship now been fully repaired?
Yeah, I mean, look, our relationship with France is in very good order. France is a really important country to Australia. France is a Pacific nation. If you include maritime borders, the biggest maritime border that France has, or biggest border that France has with any country, is with Australia, and that's the New Caledonia, of course, to the immediate east of Australia. We work closely with France in terms of providing for security within the Pacific and amongst the Pacific Island region, and we have cooperated with France more broadly. I'm meeting my French counterpart, Sébastien Lecornu, later this afternoon. I'm really looking forward to meeting with him. He's a person who I've had a lot to deal with over the last 3 years, and it is actually a relationship which is going from strength to strength.
If I could just squeeze in a quick question in relation to trade. Is Australia engaging with the US on talks in relation to that baseline 10%, the sectorial tariffs as well? And what are some learnings perhaps in terms of that agreement that was reached between the US and the UK as well for Australia?
We are continuing to provide advocacy to the United States around trade. We note that we are at the lowest level of a 10% tariff, but we would obviously we support having an open trading system. We are a trading nation, and a growing prosperity of our national income is derived from trade, and so we have been advocates around the world for a very long period of time for having lower tariffs and a more open trading system globally, and we continue to be that. We think that's obviously in the interest of Australia, but in the interest of the global economy, and we continue to make that case to the United States.
Minister, I'm afraid we are out of time. As always, it is a pleasure to speak with you and have a great Shangri-La dialogue as well. And that was the Defence Minister and Deputy Prime Minister of Australia, Richard Marles. Back to you.
Lynn, thank you so much for bringing us that conversation from Singapore. Now from Singapore to London, over to Croatia. Karen, you're making all of us so jealous with your backdrop this morning.
Juliana, good morning. Yes, it is absolutely stunning here. We've got plenty coming up from the sidelines of the Croatian National Bank IMF meeting. Stay tuned for my interview with Valdis Dombrovskis, the European Economy Commissioner. That is coming up right after the break.